Hey everybody, hey, happy to see you here. Thank you very much for tuning in. By the way, this is a quick video preview for the webinar, which is going to happen in a few moments. And we do have a very busy week, I have to say. We have various CPIs from different countries, and also we have different interest rate decisions from various central banks across the globe. Such central banks like the Fed, the PBoC, the SNB, the BOE. Look, if those abbreviations don't tell you anything, well, continue watching this video till the end. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Global Market Analyst here at Markets.com. So, ladies and gentlemen, I hope you all had a fantastic and beautiful weekend. You're all feeling nice and refreshed. So, yes, we have a new week ahead of us. We have a new busy week ahead of us. We're going to look into that, but look, before we go any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yep. So yeah, look, really, like I said, a really exciting week ahead of us, I think, in my opinion, with all the, CPIs and from various countries, and also the central bank interest rate decisions, but we'll get into all that. Let's also quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's start off first with the BOJ, which is coming out this week. And of course here I'm looking at the chart of Nikkei 225. Basically, the index managed to pop back up here, into this into this range on Friday. That's what we got here. And look at this. I mean, look, especially looking at the weekly chart. I mean, that's fascinating in my opinion. I think that's good because previously we were below that lower side of the range, and now we kind of got back into the range. So in a way, this is kind of telling us that, hey, maybe the bulls are really not giving up. Maybe everybody's now seeing some sort of value here. So yeah, look, this is a good option in a way, could be a good option in a way to jump in. However, there are a few criteria to be met first, especially from the technical perspective. We need to see, or at least I need to see it on a daily chart here, a break of this downside line taken from the high of the 24th of January, and then a push above all my EMAs on the daily chart. If I can get that move, amazing. More buyers here could join in. But let's not exclude the downside scenario yet, because look, if we struggle to move above the downside line, then certainly this move higher right now, which we're seeing, could be classed as a temporary correction before another possible leg of selling. But my preference for the downside is still below this 37,270 zone, somewhere around here. But as I mentioned to you right now, the BOJ is the one to watch. Let me just refresh the calendar. Yep, and also I wanted to include here, I do have the country, yes, there we go. So yeah, look, this week, yes, it's week commencing 17th of March, and let me just show you what I am talking about. Where's that Wednesday? Yep, interest rate decision, that's the one. So that's the one we are all anticipating very carefully if we are trading something Japanese related, like the yen, or like some sort of like a pair where the yen is involved, and of course the Nikkei 225. So at the moment the expectation is to see a no cut, although we know that the BOJ is very in for going for more hikes in the future, in the near future maybe even. So, but not in this meeting, not in this week's excuse me, not in this week's meeting. So What can I say? For now, it's kind of in a way pleasing, or theoretically should please the bulls here, because again, if there's no hike, that means that the rates remain lower. They're more more kind of stimulating the growth part. And given that right now there are some tariff issues, if I can mildly put it this way, then you don't kind of really want to rush into hiking rates unless you really want to damage your stock market. And I think the BOJ is doing a good job for now. So long story short, if we do see, we will most likely see the no action taken. So in my opinion, I think that this could be seen as somewhat of a positive thing here for Nikkei, because again, maybe the market will say, you know what, I think that the BOJ is having this good approach here, like trying to calm like the market, not rush. Yes, everybody knows that they want to go and hike, but let's not kind of irritate the market too much, right? So that's why they're keeping this one, and I think the market could see this as a positive. In general, we do have some more Japanese data coming out, so let's not forget about that. So let me just jump into Monday, there's not much. Tuesday, we're also somewhat quiet. Like I said, the main action starts on Wednesday. Initially, we'll get the trade balance, and then we'll get the interest rate decision. After that, we'll get the industrial production numbers, final, the month-on-month and the year-on-year. And I think that then the next excitement could come on Friday, because we're going to get the core and headline inflation numbers from Japan. So the official final inflation numbers at the moment look, it would have been interesting to see the numbers actually before the interest rate decision, but probably the bank already knows what kind of inflation numbers we're going to get. So it's not really something. Let's say extraordinary, that okay, they know probably what the numbers are going to be. So at the moment we're having an expectation of a lower core figure, which is because okay, this one here excludes fresh food. It does include energy, but it excludes fresh food prices. Now, what can I say here? And at the moment, yes, we know that the price of oil has declined, and looking at the year-on-year in headline number, well, that one doesn't have the expectation yet. And let me just double check another source very quickly to see if actually we don't have like some sort of like an expectation. Because again, the core one is expected to come out lower, but the headline one, let me just take a look very quickly, because again, maybe we will have the inflation rate year-on-year 4.2, expected to come out at 4.2. So the fresh food apparently could be on the higher side. Okay, that's quite interesting. So look, the core one is expected to go down, but the headline one is expected to pop a little bit higher well, at the moment I can see here a forecast of 4.2. Okay, that is quite an interesting moment here. So in a way, on one hand, you have the core inflation, which is dropping, and again, the Japanese core inflation is including it includes energy, but yeah, the headline one, which includes fresh food, that one is expected. Wow, okay, that's interesting. That's becoming a little bit more problematic in general for the consumer. So yes, on one hand, you don't want to kind of spook the stock market by hiking rates, but actually you will have to do that. So okay, maybe it's gonna be in the next meeting or something like that. But again, at the moment, interesting. This is something. If we do get actually the the headline number, and if it does come out at 4.2, okay, the Japanese yen could actually pick up buying interest in a way, and not only because it would be, let's say, an indication that the central bank could go and hike more later on, but also it could act as a safe haven. So for some investors. So yeah, look, like I said, it's going to be quite interesting. The Nikkei here could actually let's say correct back down. So let's say at the moment, okay, this is, like I said, this is where it's painting me another interesting picture. So let's say we continue rising, we continue pushing higher, and we continue moving to the upside here, but it could, like I said, it might not really like spark that much buying, but let's say, there could be some positivity, especially if we see some recovery in the US indices as well. But if, like I said, coming Friday, if inflation comes out on the higher side and on Friday, then, well, that's, like I said, that's where the tricky moment could come in. We could see that, another round of selling. But let's not overcomplicate things. Let's go slowly. Let's take it from the short-term perspective. So at the moment, I'm cautiously to the upside, but only up until these EMAs and this downside line, and then we're gonna go from there. Let's jump into China. Let's jump into something more positive, to be honest. And look at this, spectacular movement here in China 50 index. I mean, this positivity is coming from the continued support of the economy, of the Chinese economy, recently the government said that they're gonna do, they might do more cuts. The central bank said, yeah, they might do more cuts. So speaking of cuts, in that case, let me just check if we have China. Yes, we do have China, and China is coming out on Wednesday, if I'm not mistaken, in terms of the interest rate decision, or was it Tuesday? Let me just double check. So okay, Monday we have this, Tuesday we have I think, or maybe it actually could be Thursday. Yeah, I think it's going to be Thursday. Where I saw it, there we go, that's the one that I'm talking about. There. So 1 in 5 years. So at the moment, it seems like we are not going to see any, at least the forecast is telling us that we're not going to see any cuts or hikes or whatever. Just going to stay the same at 3.1 for the 1 year and 3.6 for the 5 year. Okay, but look, surprises do happen, and surprises do shake the market quite nicely. And at the moment, looking at the China 50, I think that they want to keep the momentum here. I'm really not going to be surprised if they're going to come out with a cut of 25 basis points on both sides, on the 1 year and the 5 year one. So this is where, like I said, this is where the excitement could come in. And I think that, yeah, we could even, travel further north, maybe even hitting that 14,000 zone finally. So let's see. But again, this is, like I said, something to keep an eye on, especially on Thursday. Today we got the some numbers here from China, like the unemployment rate 5.4, retail sales 4%, industrial production 5.9, a little bit lower than the previous. House price index, yeah, continues to drop. So in a way, these numbers are telling me this is in favor of the cut. This could be slightly in favor of the cut. This is okay, and this one is in favor of the cut. So like I said, that's why I'm not going to be very surprised if we actually do get a cut straight away here, although there's forecast. Okay, look, let's not over speculate on this one, although, it seems you might have the feeling or everything. I always keep on saying, put your feelings deep somewhere in your, in the box, and just go with the facts. So when it comes to trading, unfortunately, you have to do that. So I don't know, fortunately, unfortunately, but you have to do that. So in a way, long story short, keep your eyes on it. Like I said, keep your eyes on the numbers here, on the Chinese numbers. If you are trading China 50, I think that's a good instrument to trade, especially given that, this is so far working out like a charm. At the moment, we're seeing a nice little correction back down, which is fine. But again, this correction, yeah, could be something like this, and then we could continue pushing back up. Let's put it this way. As long as we stay somewhere above the 13,500 zone, I'm going to continue targeting the upside, but only in the near term, because let's not forget that this move higher could still be classed as a temporary correction before another possible leg of selling, because we are below this downside line taken from the high of the 8th of November. Dow Jones Industrial Average. So, okay, let me just Let me just remove this a little bit here. Look, we broke, we broke below the lower side of this range. I talked about it. By the way, ladies and gentlemen, whoever's watching this right now, good morning in the chat room here. Good morning, everyone. I hope everybody's having a beautiful start of the week. So I just wanted to put that in the comments. Look, I talked about this a lot already. I think that I'm gonna, remain with the same position as long as, from the technical perspective, as long as we stay below this 41,700 zone, I'm going to lean towards the downside. That would be correct, or let's say that would be, easy to follow if we wouldn't have the Federal Reserve on Wednesday. So look, at the moment, where's that in the calendar? There we go. So Federal Reserve interest rate decision. We are currently in this range between 4.25 and 4.5 interest percent. So the moment, like I said, this is where we are sitting, and the upcoming March meeting, which is going to happen in 2 days. It's like I said, it is expecting to see this, that there's going to be no action. We're already seeing it 99% here. What I'm interested here right now is the December. Now this is where it's interesting, that it's shifting back to this lower side of of having 2 cuts only. So this, look, if you remember, I talked about this a lot last week, and I said to you that, hey, we are currently expecting like three cuts, and then we were expecting 3 cuts, and now look, we're slowly shifting back to 2 cuts. Again, I don't want to rush into things. I keep on saying that we will probably change several times by the time we get to this December meeting, but the most important probably meeting right now will be the June one, because this is the first meeting where we are expecting to see a cut. So in the June meeting, so that's something that you probably need to be careful about. Before June, maybe the market could remain a little bit on the somewhat on the lower side, because again, those tariffs are damaging and everything like that. But what could spark some buying interest here could be the Fed's or Powell's kind of rhetoric and the way he's going to say, the way he's going to talk. He's going to keep on saying that, we need to, we're looking at cutting rates quite positively, and we're looking at cutting rates like 3 times this year quite positively, or something among those lines. Then yes, this is where the excitement for the buyers could come. However, the problem right now is that every day is a different one. Every day is a new surprise from the new leadership of the U.S. And it becomes kind of, like I said, this problematic moment. You don't know where to go, and that's where I think that the markets are like getting spooked from. So again, long story short, for now I'm approaching this one, like I said, very carefully. I'm looking at the like I said, this 41,700 zone together with the 200-day EMA. If we do stay below that, I am leaning towards the downside. The S&P 500, similar story. I'm not excluding a possible retracement back up, but I have to say that if we stay below the 200-day EMA somewhere here, I'm still gonna continue targeting the downside. So basically, my scenario is something like this. Nasdaq 100, we're currently resting around, or not resting actually, we're oscillating around the 23.6 here in the Fibonacci retracement, which is drawn from the lowest point of 2022 to the highest point of 2025, or the current highest point of 2025. So yes, we're currently oscillating around that 23.6. So very simple. I mean, I need to see a drop below that 23.6 again in order to go lower. Let's jump into another index. I will keep the dollar index for later actually. So you know what, let me just drop it like this here. Yeah. So look, the German index DAX. Now I talked a lot about this, and I said to you, and I threw out this idea here on TradingView. By the way, it picked up some nice views here, and it got picked by TradingView, the editors in the editor's pick. So yes, you can check it out. But look, I talked about this, and I said I'm going to be very careful, because while we remain in this territory, I'm kind of cautiously bearish. But again, if it starts jumping higher and clears my 22,850 zone here, I'm going to start pushing to the upside, because again, this is really fascinating to see that the U.S. stock market is not feeling very well. However, the European and the Chinese indices and some other major bourses across the world, those are doing somewhat fine, I would say. So even though there are some tariffs, but it seems like the tariffs are hurting the U.S. instead of hurting the those against whom the tariffs are applied. So yeah, a little bit of irony, right? But anyway, what can I say? For now, I'm leaning a little bit more towards the upside, as long as we stay above the 22,850 zone. If we continue to trade above that, yes, great. I'll aim for the upside. I'll aim for the current all-time high, or maybe even higher. For me to start looking at the downside, well, this what I need to see here is, okay, a push back below the 22,850 zone, that would be great. But then actually a drop below the this upside line could be fine as well. So long story short, I would prefer to wait for a drop below this upside line. Maybe, I know it's a little bit on the tentative side, maybe it's a little bit on the steeper side, but hey, I think that's a good line to watch. Let's jump into the FTSE 100, ladies and gentlemen. FTSE 100, so yes, beautiful pop back up. Oh, by the way, I didn't mention the European inflation numbers, because those are coming out. Okay, first we're on Tuesday, we're getting the trade balance, but we have a speech today from Christine Lagarde, and yes, trade balance numbers from the Eurozone, together with the ZEV Economic Sentiment Index, which is expected to improve a little bit, so that's great. Maybe actually the DAX is helping to improve that sentiment. And then on Wednesday, we're getting the CPI numbers, the final CPI figure for February. Look, inflation rate year-on-year final. We're expecting to see a drop a little bit. So if that's the case, then certainly yes, this could actually fly further up. So let's keep an eye on it. If it comes out, let's say somewhere, like the previous figure, then I still expect the DAX to actually push higher, but maybe not, and maybe not as let's say drastically, but again, who knows? For now, I mean, this could still be somewhat of a positive thing here for the German index, to see the number, let's say somewhere around 2.4 and 2.5. And in general, I said it before, and I'll say it again, the European numbers are not the most exciting, because most of the time they come out as expected. So there's no like element of big surprise or something like that. No, they just kind of come out nice and as expected, and that's kind of it. So that's why, yeah, we're keeping an eye on those. But hey, anyway, the FTSE 100. So right, okay, we have the BOE this week, and that is coming out on Thursday, if I'm not mistaken. Yep. First, we're going to get the job numbers from UK. That's absolutely fine. And then we're going to get the interest rate decision, where this time the bank is expected not to cut. Right. Okay, let's see what's going to happen there. But I think that, again, we have to be a little bit on the careful side. Maybe they will give us a little bit of a surprise here, and if they do, we can see maybe the FTSE getting boosted a little bit. However, again, I'm not getting way too optimistic to see some sort of action here, because again, most of the time these central banks, they do kind of come out in the same way as expected, but still. look, for the moment, for now, if we do see some sort of a drop in rate, then I could expect this one to travel further north. And for me, the downside scenario on this one, look, it's going to be very technical for me. A drop below the 50-day EMA shown here as the green line, yes, could open the door towards that 100-day EMA. If the 100-day EMA gets cleared, I'm going to go further south. So that's a very simplistic approach for me here on the FTSE 100. The US dollar index, of course, we are keeping an eye on the on that interest rate decision from the Federal Reserve. Like I said, we're looking at what they're going to say, like what Powell's going to say. If he's going to say that, you know what, we are really willing to go and do cuts, so we could see the US dollar maybe drifting further south. And again, I said before, look, if we do remain above this 103.26 territory, I'm going to consider a little bit of a move to the upside here. If we start somehow pushing back down, well, I would say this way, that a drop below, let me just grab a line here. So let's say this. So for me to get comfortable with the downside scenario, a drop below this 102.83, 80 zone-ish, somewhere around there, would be needed in order to go lower. Yes, a forthcoming lower low then is confirmed, but potentially attracting and potentially opening the door towards that 101.80 zone, and then we'll just kind of go from there. Right, okay, ladies and gentlemen, let's jump into the Forex world. I'll jump into cryptos in a bit, but yes, AUDUSD pushing nicely to the upside. So of course, we're being very careful this week because again, we are having this, Federal Reserve interest rate decision. So just if you are trading something dollar related, US dollar related, then just keep that in mind, be careful. At the moment, yes, everything is pointing more towards the upside, so as long as we stay above this 0.6330 zone, then yes, great, I will continue targeting the upside. For now, like I said, it seems like it could be a good move higher here because it seems like we're creating a higher low. Can we go for a higher high? Well, I mean, I think it depends if we can clear the 100-day EMA here as well. And then maybe if we can clear the 0.6408 zone. Quick update on the AUDJPY, pushing nicely back up. So that's part of the larger correction back down moment here. So larger correction before another move, another possible move lower. So again, we should not exclude this downside line taken from the highest point of July of 2024. So yes, I think that is the line to watch right now. So hey, oh, my knee is stuck. There we go. Okay, my knee. Yes, getting older. Look. At the moment, like I said, it's our risk on, risk off monitor is showing that there is, risk on building up, it seems like that. But if we can get a nice break of this downside line, I think this is where more buyers could join in. NZD USD doing a little bit better than AUD, doing better than AUD. We can see this by here, by this one, AUD NZD. So yes, NZD USD is pushing nicely to the upside. Let's see if we can get that clearance. Okay, we are already clearing the 100-day EMA. That's fine. Can we clear? Oh, excuse me. Can we clear the 0.5771 zone? If we can do that and we can stay above it, I'm gonna go for some upside. USDJPY. USDJPY, yes, looking good here. Look, can I say? For now, where I'm keeping an eye on this area right there, this highlighted zone, for me to start shifting my attention to some higher levels, well, you know what? I really need to see this one not only pushing back above this highlighted zone, which is roughly on my chart, which is roughly around the 148.63 and 149.40 levels, but also a break of this downside line, period. If we stay below it, there is a chance of this one drifting back down, especially what I said to you about the yen because again, the yen could be the, if the market turns south again, then yes, the yen, it could be the one being bought, and especially with the Feds. If, like I said, if the Fed suddenly says that they're willing to go for some cuts, then yeah, I mean, this might not work out well for the U.S. dollar, and we could see this pair sliding nicely to the downside. USD-CAD, very quickly, we're in a bit of a choppy moment here, so. Still watching that 1.4466 zone, and we keep getting false breakouts. If we can get a nice push above it and we stay above it, great. I'm going to go higher. For the downside, a drop below the 1.4279 zone is needed in order to drift to the downside. US dollar against the Swiss franc. Look, what can I say? For now, it's also, we're seeing a nice little correction back up, but again, we're below the EMAs, we're below this downside line taken from the high of the 12th of February. We're below everything still, so this move higher could be classed as a temporary correction before another possible leg of selling. So keep your eyes on that one. Euro USD. So again, a lot of everything kind of is building into that Federal Reserve interest rate decision. So if that one somehow is able to bring the dollar further down, then certainly a Euro USD is, we're keeping a close eye on this 1.0936 territory. If we can get a nice clearance of that one, we have the psychological 1.10 zone on the line, or maybe even higher levels. EUROJPY, again, stuck here, but very, very interesting moment here. Let's see if the European data can drift this one or push this one higher, or of course, especially if the BOJ can do the trick here. Let's see what's going to happen. But like I said, if you are watching the central banks this week, like I said, if you are trading this pair, then certainly keep your eyes on the BOJ. Quick update on the Euro Aussie. There we go. Beautiful hold up here near this 23.6. So far, so good. Oh, bear with me one moment. So, what can I say? For now, if we do remain above this 23.6 here on the Fibonacci retracement, which I have drawn here, then great, we could see a nice little recovery here back up. But if we do drop and stay below that 23.6, then certainly yes, lower levels here could be met. Let's jump into GBPUSD. Of course, we're keeping an eye on the BOE and its interest rate decision. That bank is expected not to go for a cut, so maybe this could actually help the pound here, the British pound, to push further north, because like I said, I'm targeting that psychological 130 zone and slightly above that, the 1.3040 area. If we can get a nice move there, then yes, like I said, the next target here is the 1.3040. For me, I think as long as we stay above the 61.8, I'm leaning towards that area. If we start falling below that, well, there is a chance for a larger correction back down. Let's jump into gold, ladies and gentlemen. Gold looking good. Look at this. Last week on Friday, we rallied, and we rallied nicely. We hit the area above, slightly above the 3,000 mark, and yeah, there we go. Mission accomplished in a way. So now the question is, where are we going to go next? Well, look, I told you last week, and I picked up on gold as well, and I picked up gold in one of my videos here on our Markets.com YouTube page, which you can always subscribe to in order not to miss anything. I picked up on gold here, as you can see, and yep, look, so far so good in a way. So let me just apply my Fibonacci extension. I think that's quite a useful tool. Why is it? Oh, there we go. Somehow it's lagging a little bit today. So yeah, you can see that we've tested this 38.2% on the Fibonacci extension, and look, but again, it really depends on how you're going to draw this one. If you're going to draw it from the low here, the lowest point of November, then it's this way. But if you're going to draw it, for example, from the lowest point of December of 2024, then you'll see that, you know what, if we do continue to trade above the 2,975, the next target could be the 3,000 kind of 20 zone ish. That could be the next good target, and I think that yes, something for the bulls. But again, keep your eyes on that 2,975 territory at the moment. If we somehow start falling below it, maybe we could maybe we'd consider a little bit of a retracement back down. But again, it's a tricky one with the back down, because look, I will say it differently, that if we do start falling below below Friday's low, which is around the 2,978, then yes, I will consider a bit of a move lower, maybe towards this 2,956, and then we'll go from there. But again, being very careful with this one, especially careful around Wednesday, when the Fed is going to be coming out with the interest rate decision, and most importantly when we will see the press conference, because that's when the excitement could come in, not during the interest rate decision itself, but during the press conference. So keep that in mind. I think, like I said, I think that's worth mentioning. Silver looking good here. We are seeing a little bit of a retracement. That's fine. That's all okay. But again, similar story. I'm not going to spend too much time on this one. It's the same kind of issue. If we stay somewhere above this 33.38 zone, I'm continuing to target the upside. For the downside, a drop below this downside line here is needed. So if we can get a nice drop below this downside line, then yes, great. I'll consider a move lower. Oil, let's have a look at this one. So we're having that retracement back up, which is fine. We've pushed back above the $67 mark. That's fine. But we remain below this downside line taken from the highest point of January. So long story short, if you're looking at some lower levels, I think we might not be done here with the downside, as long as we stay below this downside line. If we break the downside line, okay, great. I'm going to go higher. Very simple. But ideally, of course, a drop below this 65 territory is required in order to go to the downside, because a forthcoming lower low will be confirmed. Natural gas looking good. Look at this, how well it's playing around this upside line taken from the low of the 31st of January. So we're currently above that upside line again. But am I getting very comfortable with the upside? No, not really, because I would prefer to see a push above the 4.46 zone here. If we can get that move, amazing. I will go higher. For the downside, what I would like to see here is a drop below this little territory. So if you're looking at some lower levels, or in search of some downside scenarios, well, 3.95 breakout here could be your option, because this way a forthcoming lower low will be confirmed, potentially opening the door to some lower levels. But again, then the problem is the 50-day EMA. So yeah, that's kind of it. That's the simplistic approach here on the natural gas situation. Coffee, very quickly on coffee. There we go. Boom, we're breaking the upside line, and so far so good. So I talked about it, and yep, I'm going to continue aiming to the downside. So long story short, for now, yes, of course we're keeping a close eye on the 50-day EMA, shown here as the green line, but if that gets cleared, all eyes are on the 366 zone, which is the low of the 26th of February. Very quickly on cotton, and I'm going to wrap up. I'm going to jump into the cryptos. So yeah, look, I mean, cotton continues to push higher nicely, so that's all fine here. I think, look, I think that this 69 barrier is something that needs to keep an eye on, because if we do get a nice clearance of that one, I think I'm gonna get even more comfortable and more excited with the upside, where we could then target these levels here. I think those are good. The 72 zone and then the 74.40, I think that could also be a nice good target to aim for. And let's jump into the crypto world. Yes, Bitcoin is still holding above the 200-day EMA, so in a way the bulls are happy, but maybe not as happy as they would like to be, because they would like probably to see a bigger move, like they saw in other cryptos like Ripple recently. So, but yeah, look, it's still good, still okay. What can I say? For now, I am being very careful here, being very cautious, and I'm not saying I'm going to get very positive, but because the downside scenario is still on the table, especially if we do fall back below the 200-day EMA. Bitcoin Cash rebounded, pushing higher. So look, there's a lot of ifs, but still, I mean, this is looking good, I would say. I talked about the crossroads of these two trend lines, so far, like I said, it seems like it's doing a good job. Let's see if we can actually go for a higher high. Ethereum, okay, we're stuck around the 1,900 zone. That's fine, but I'm still on this one. For some reason, I'm still very bearish, honestly. Like, I mean, there's a little bit of negativity circling around Ethereum, and that's what makes me worried. Let's say, like, for example, unlike Ripple, which is, which picked up buying interest, because apparently Ripple Labs got a payment provider, payment like PSP license in UAE, so that kind of makes it a little bit more legit again. Look, I mean, it has an ongoing SEC court, but that might come to an end soon, so we'll see. Litecoin is beautifully rebounding from this upside line. Amazing. I like this crypto, and I think that, yeah, it could present itself with some nice opportunities later on, especially if it continues to trade above this upside line and slowly starts clearing the EMAs here, the 200, the 100, and the 50-day EMA. Jumping into Dogecoin is still, we're being very cautious with this one because, again, yes, we're seeing a nice little retracement, but hey, maybe this is just a little temporary correction for another leg of selling. But in general, I can say this way: as long as we stay above the lower side of the falling channel, then there is a chance to move towards the midpoint here, the midpoint of this falling channel. And finally, Polkadot, beautiful pop here. Look at this, held nicely above the lower side of the box where we are currently stuck in. So we're stuck in this box, and we rebounded nicely. So in a way, this is kind of bringing this positivity, and in a way, that's showing that there could be a chance of a move, towards the upper side of this box, of this range. Let's see, the upper side here on my chart is roughly around the 5.23 zone. That's a good target. Let's see if we can reach that one. So, ladies and gentlemen, that's it. That's it for this session. I wanted to quickly run through this one because, again, we have a busy week. I hope you found this session useful. If you have any questions, you can always drop them in the live section, or maybe if you're watching this one as recorded, so drop them in the comment section below the video. So hey, join me on Wednesday, as always, 8 o'clock GMT time, for another midweek review. We do that on Mondays. We do these videos. I do these videos on Monday, Wednesday, and Friday. Monday we have the weekly, the week ahead moment here, the week ahead video. On Wednesday we see what's happening during the midweek, and then on Friday we jump into a weekly wrap up just to see how the week has ended. So I hope you liked this show. I really tried my best to to deliver as much info and to prepare you for as many events as possible. So hey, let me know in general if you like it or not, but please do subscribe in order not to miss any of these shows in the future. So thank you very much. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.